Hello stock traders, I hope all of you are having a terrific morning. In this video, I'm going to talk about the SPY, different support and resistance levels that you need to be aware of as we are having this convergence on the S&P 500 and we are getting ready for a break either in the upward direction or the downward direction. I also have a stock today that is ripe and set for a big move upwards, and so it's something that I'm watching, and I'm going to talk about it a lot in this video at the end of the video, so you will want to stay till the end. But before I get going, if you could do me a favor, please hit that most amazing and wonderful like button. Also, if you haven't done so before, please subscribe and turn on those bell notifications so you get notified when a new video comes out. Also, don't forget to comment or share this video with others. All right, well, let's get to it. Let's start talking about business. And here we go. Let's take a look at the SPY ETF. The very first thing you're going to notice is this downward channel that I have here. Now, until the price action proves to me that we are not going to continue downwards on this level, then I am bearish on the market. Now, we do have support level coming up this way, and so this looks pretty nice here, and we're kind of coming to a head right here, so you can see this happening. And right now, for tomorrow morning, when you are watching this video, 397 is resistance on the S&P 500 ETF, and 393 is support. So that's what these yellow lines are here. And so it's important that if this bearish momentum is going to continue, then we're going to have to continue to be below this line as we go lower. Now, I think a big credit crunch is coming and that we're actually moving towards the downside, that soon we will have a recession. We've had an inverted yield curve for a very long time, and that we will see a dump in the stock market. Now, I think there's one of two different targets that I have. The 1969 bear market, which was down at 326 on the SPY ETF. Or if you were to compare the 1974 bear market, that would bring us all the way down to 274, which would be a huge drawdown. And we have a lot that is similar, especially if we see unemployment start to tick up. And so that's something to watch. Now companies are having a harder time borrowing with this bank collapse that we're having. We could be heading for a credit crunch. This is something that I am watching that you will need to be aware of. And as long as we are below this descending resistance line that I have here, then I am expecting the market to move downwards. Of course, I love it when the market goes up. I make most of my money in up markets, but I have learned how to make money in bear markets, and it's a very important skill to have. Now, a couple stocks that I like for a bear market, if this continues down below here, every time we come up to this range and we touch up here, then I like a particular stock. I like SPXS, and this is the Direxion Daily S&P 500 Bear ETF. This is a 3X ETF, so this is leverage. So you have to be careful with this, but at the same time, it's not like the SPY moves that much unless it's moving downwards. And so I like this one to spike upwards. And so this is one that I like to use. During bear markets, I will put a portion of my portfolio on this as a hedge against my bullish positions. And so that's something I just kind of wanted to talk about a little bit today. Just kind of give you maybe something kind of going on here. We have this 200-day moving average down here that we bounced nicely off of. But, not feeling good about the overall market. I think eventually we will see a recession. I wish it wasn't true, but I don't think that the rate cuts of the Fed is good news. They will only cut or reverse their stance on rates, in my opinion, if there's more of a crisis. And so that's not a bullish move by any means whatsoever, or if we're in a recession. And so I think that we're coming up on that, and we could be heading down much, much lower. All right, well, let's get into the stock that does have some good insider activity, and this is ticker symbol DLTR. This is Dollar Tree Incorporated. These are everywhere. And anyway, lots of really nice insider activity that I'm going to show you here in just a moment. Okay, so as you can see here, right here at insider-monitor.com, we have Dollar Tree, ticker symbol DLTR. The chief financial officer purchased a little over 200, just under 250,000 in an open market transaction. $139.06 is their average. And so I like this transaction. It's really the only transaction that is of importance of all of these. I think that this one will be a nice mover. Going in, if you're looking at this on Wednesday morning, this might be one to take a look at if it fits you. I don't think it's going to be a 40% or anything crazy like that. This is a safer stock by most means. But I do think that we could see a 5 to 10% move on this one over the coming days. And looking forward to this investment, I will be looking for entry on Wednesday morning. I wish you all the best in the stock market. Please be careful out there. It is a very tricky market. If we get above 400, it is a bullish market. If we get down below 390, it's extremely bearish. That is a very simplified view, but it can help you to kind of keep track in this crazy whipsaw market that we're in. I wish you all the best on the stock market. Please reach out to me in the comment section down below. And Raythoven out.